Income tax 2020, tax software example, Social Security benefits. Come in, relax with income tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along, although you might be able to get access to a free 30-day trial of it, which I would recommend to practice with if you can. But we're going to be working on the 1040 here, or the 1040 SR, and we're going to be going back and forth with the data input to run different scenarios to see the impact of the Social Security benefits. So we got our single filer. We're going to start off with Eric Smith. Down below, we have the wages. We're going to start off at that 100,000, which we've been doing in the past. Then down below here, we have the standard deduction, which is at 14,050. Why is it at 14,050? Because it's a single individual and they're going to be over the 65 limit age. And therefore, we're also going to be jumping over here to the 1040 SR from time to time. So if I enter this into our Excel worksheet, just to look at it from a formula perspective, we have our 100,000. We have the 12,400 would be single, but now we're going to pick up that 12,400 plus another 1,300 for being over the 65. That brings us to then, I'm sorry, one more time. That's going to be equal to the 12,400 plus the 1,650 for single, for being over 65, and that's going to bring us to the 14,050. Therefore, our taxable income's at 85,950 to start off with. So we're going to say taxable income 85,950. So then we're going to add the Social Security benefits. So you would be receiving, the client would then have a form SSA. This would be from the government, another 1099 form. It might look a little bit different because it's from the government, but it's going to be a 1099. It'll say a 1099 on it. And therefore, you're going to say, hey, I need to include this in income possibly. And so let's do that. So I'm going to go and say it's going to be on the line item here. Line 6A is where it's going to go. We have the Social Security benefits in 6A and then the taxable amount. So we're going to show the total benefit in 6A, and then it's going to give us the amount that is taxable in 6B. Let's go ahead and right click and jump to that cell to where we would do the data input. I'm just going to start off with $1,000 in there. Nice even number that we can check out. $1,000 back to the form. Let's see what it does. So now we got the 1,000 in the 1040. And note, we also have the 1040 SR that we can be taking a look at here. We got the same kind of information. It might be easier just to kind of look at the 1040 at this point because we're kind of used to the layout. So let's just stick with that for now. We've got the line 6A. We have the 1,000 being included. That's the full amount that was included. 850 then is the taxable amount, the amount that's increasing the tax. If we pull out the trusty calculator then, and we do some trusty calculating, we would then have the 850 divided by the 1,000 is, of course, that 0.85 or 85%. That then is because this individual is single and is making over the 34,000, so you'll pay taxes up to 85%. So 85% is currently being included in the taxable income and therefore will be taxed typically at the normal ordinary income tax rates. If you were to enter this into our worksheet, we could do the same thing. I would say now we're going to have the Social Security, and you might do the calculation here if it's a basic calculation, which would be 1,000 times 0.85 to give you more detail on the calculation. That's going to be included in income, back to the formula, included in income. And then we have the standard deduction, so that means we should have income, taxable income of 86,800. Checking this out, is that the case over here? 86,800, so that looks okay. Now let's take a look at some of these other thresholds. So let's take a look at these thresholds and say, all right, for 2020 year, single filers with combined income of 25,000 to 34,000 must pay income taxes of up to 50%. Let's say they make under 25,000. We're going to say they have less than 25,000. Let's go to our income line. I'm going to go to wages and let's make this 23,000. And then I'm going to go back up to the forms and see what that does. What does that do? Now we have the 1,000 here on the Social Security benefits. We have nothing for the taxable amount. So it's just an informational purposes that they put it in line 6A. Nothing's included in the amount that's going to be included for taxable income, the amount of income that's going to be taxed upon, and therefore it's going to have no impact on the tax calculation. Let's go up above that amount. Now we have a single filer, and let's go up between 25,000 and 34,000. So let's go around 30,000. Say let's pick up 30,000 then, and say test that out. 30,000, and then go on back over to the forms, and we're going to say that now 50% has been included in there, right? We had 1,500 are included, so it's picking up 50%. So that's because if it's between 25,000 to 34,000, must pay income taxes on up to 50%. So then, of course, if we're over the 34,000, then it could go up to 85, right? So then I'm going to say, well, what if we're at like 36,000? I'm going to go back to the forms here, 36,000. So now it's at basically the 85%, right? So we got the 850, the 1,000 was paid in, 85% of it now is being included. Let's switch it up to married. Let's say, well, what if we're married filing joint? And so we'll go to the client information. We're going to say, let's bring it on up to married filing joint and go through our thresholds once again and check them out. So now we're going to say for married people, if it was less than 32,000, you would think it would not be included. So let's bring it on back down to 30,000 and check that out. Go to the forms, check it out. Okay. And we then have the 1,000 here, none of it included in taxable. So it's based on, an income type of calculation, right? And so now we're going to say, okay, what if it's between 32 and 44? So let's make it like 37 or something. Let's make it like 37. So I'll say, well, what if we're at 37 on the wages? See what happens, what will happen. Now, 50% of it is included. So we had 1,000 Social Security benefits. Half of them are included. So half of them are going to be included in taxable income. Therefore, half of them will be taxed upon the ordinary income tax rate being applied to them. And then let's try and say, well, what happens if we go like over 44,000, making it like 45,000, and then go back on over to the forms. And we're going to see that now we have 85% that is included at this point in time. So if you want to see the calculation for it, I'm going to go back up to the 1040 form and just because I have the little worksheet right here, you can go through the worksheet and it'll kind of go through the calculation line by line for you. Now this can be kind of a tedious calculation because it's basically taking an algebraic formula and kind of breaking it into a vertical, tax return type format. But it can be useful to just go through this thing line by line and get a full understanding of how the tax calculation is basically being applied. But obviously you're not going to recite this line by line calculation to a client. You want to give them basically the general concepts and then be able to use the software to help you to make the calculations exact for the tax preparation purposes.